Welcome to another video, and in this video I will be showing you guys how you can eventually take advantage of such moves and what you are doing exactly wrong in your trading, and why you are not achieving the results that you want to achieve. All right, so stay tuned and let's get into the video. So usually when people are all over the place, they don't have basically no consistency, no progress in their trading, are not achieving what they want to achieve. It comes down to these three things. Okay, we can take out the third part for now. Okay, the first two things are the main things, because you can trade without fundamental knowledge. But if you want to really boil down, right, and you want to be an all-around trader and understand things fully, you have to have a minimal understanding of fundamental knowledge, and we will break that down in this video. So let's get to point number one. All right, so point number one is people are all over the place. And what I mean, people are all over the place, with meaning people are all over the place, they don't have a strict trading plan. They don't know what they're trading. They're trading multiple time frames, like 1 hour, 15 minutes, then the next day is 5 minutes, 1 minute, then it's daily, 4 hour. So people are all over the place. They don't have a strict protocol they abide but to, and that's why they're trading as well, and their results are all over the place. So what you have to do if you are all over the place is actually start getting a process in. Okay, so you need to have a strict process. Okay, start with it. Okay, what are you trading? What is your watch list? What is your time frame that you're trading? What are the time frame pairs? What you do analysis on? What you do execution on? Which times you execute? What is your basically what is your watch list? Okay, so you have to have all these things down, and then you can basically start knowing what you are doing wrong and right. Okay, and then not having this strict process, most people as well won't be journaling. Okay, won't be journaling. So these things all basically bring you, okay, or basically conclude into most people not journaling. Okay, and if you are not journaling, okay, this can be a big problem. Okay, and when you're not journaling, you can't know what you're doing right, what you're doing wrong. If you go just by your head, trust me, this won't help. So you have to do a strict process, so you know what, when, what, and how you trade it, and you have to journal it. So have basically a library of trades taken, trades missed, losses, wins, everything, so you can start then basically knowing what is actually my edge. And this is where we come into point number two. Okay, so no edge. We know exactly, okay, we know exactly the ins and outs of our system. Okay, and we will get into the charts. Okay, we will get into the charts, and I will show you an example of, let's say, a trade or a system that we follow, and you can basically take advantage of that. Okay, and maybe build that onto your own system. Okay, so ins and out of our system. Okay, we know what our usual stop sizing is, what our usual targets is, how do we get into a trade, how do we scale into a trade, what we do, what we can expect how much our trades will move, how long it will take, all these things. Okay, so we know our watch list indeed. Okay, so that's why I say as well, in the beginning, trade just one pair, but with time you can add more pairs to the watch list, but you have to have an all-around knowledge of your watch list. You have to know what's going on in every specific country if you're trading Forex, what's going on, and eventually builds your whole how can I say, picture of a certain pair from that, and then you come in with your system, etc., etc. But we will get into that into the last part, which is no fundamental knowledge. Okay, so let's get back into the charts. Okay, and I will show you now how we basically would be catching that trade that I showed you guys in the beginning with our system. All right, so guys, we are back here with an example on the charts. Okay, this is what you have seen right when the video started, and what I want you to take from this is so you have a basic understanding of what we do in our community. All right, if what you have been listening to, if what this video has been talking to you basically resonates with you, you can find a link to basically talk to me, no strings attached. You can book a time that it's convenient to you. Just do that on yourself, and you maybe will get a free consultation call. You have nothing to lose. If you think that I could help you somehow, all right, then just book a call and we will have a call, a chat, and I can see if I will help you or not. And if not, we are good to go, and you have a free session basically. All right, so the link is in the description. So let's get back to the video. So what we are trying to look for, or what we consistently look for, is breakout structures to the up or downside. Okay, this is the simplest way I can tell it to you. And what you have seen here in front of you on the charts, right, is a clear break of structure to the upside on GBP Japanese yen. All right, this right here, all right, you can call it an order block. All right, we usually don't use that knowledge. We are aware of certain concepts, and you will see ICT concepts on this channel as well. But usually we call this demand or supply level. Okay, but you can call it order block as well. It's basically the same thing. Okay, so we have seen a demand level breaking structure to the upside. What we are trying to trade in here, okay, is to move back into the zone, and then inside the zone we will be looking for a very specific thing to happen for us to trade the trade. Okay, these things we go very, very in deep in our community, in our one-on-one consultations and stuff like that, but you can see it on the 4 hour. But like I was telling, people usually don't have a strict process on how to approach things, and we personally use the 4 hour to draw our levels and the 15-minute to execute. And we want to see certain things happen on the 15-minute, okay, because we want to have a little bit more precision for us to take the trade. So in this case, we will be looking to buy the dip, okay? And here we will come into the fundamental factor as well. If you look at GBP Japanese yen, you can see that it has been in a bullish trend for a very long time. And that's fundamentally driven, okay, just by knowing interest rate differentials. Okay, you don't have to get in too deep into that. You can understand that basically we have a little bit more buying pressure on the pound yen, so you can take that on your advantage. So what or how you do that is, okay, we are bullish, we have some fundamental knowledge that potentially we should be seeing a higher pound yen. All right, and what we do with that is we go on our technical chart, look for prices where buying would be in our favor, or where buying could be interesting for us. All right, and where we could get a better value for our buys, because we can have fundamental knowledge, but buying in here wouldn't be very very smart, right? So we have to know these things. So price pulls back into our 4 hour zone, okay, and once price is in here, this is where it gets interesting for us. So let me just get back into this candle, all right, and get into the 15-minute chart. So in the 15-minute chart, we have here basically what we want to see is that liquidity run. Okay, you can see something will pop up on the chart now. Basically, we calling this out in the community, right? We calling exactly, okay, we are looking for this zone, 4-hour zone. Okay, so you don't think this is something just pulling out of us anywhere, right? So we are looking for this liquidity run. Once that liquidity run happens, okay, once these early buyers are trapped, okay, we can get into this, okay? And basically, the target depends on yourself. You can target, if you want a short-term trade, these liquidity points, okay, or maybe the overall liquidity where it's sitting in there, okay. Also, you can have a fixed target, okay. This is all things that we can work out on an individual basis. So let's say we enter here. After that pin bar, you could have entered before as well. You set your stop at 25. If you're aggressive, you could set a 30 pip stop loss, which is quite a good stop loss on pound yen on these moves, as usually it moves around 150, 200 pips in a good move if you catch the right move during the week. And basically what we have in here, you could have a G212 here, all right, and all the way to the top there, you could have a 6-to-1 trade, all right. So what you see, the rest is history, okay. Price moving higher and higher and higher, okay. So basically this is what we can see in here, and that's pretty much it. I hope this video was interesting for you guys. I will continue uploading more videos, so you can expect the next video in the next few weeks. Leave a like, and if you have any suggestions, just let me know in the comments, and I'll get right back to you as soon as possible. See you guys.